Hey, what's going on, guys? This is Wells Only and the homie Maddie all in.
Hey
On
everybody.
a how you doing, guys? Yeah. On a the latest episode of Hex Talk Live. This version is going to be a little unique. It's going to be a little more not crypto centric, but crypto focused as well, because what we're talking about is just all markets. But the point of view is going to be different because I'm going to talk about everything from the top down, and it's just going to be a different vantage point from what you guys are used to hearing me talk, because I've never, like, what I'm about to talk about today, you guys have never heard me talk about before. So this is going to be a very different kind of episode. It's not going to be the usual 100 miles an hour. In fact, it's even going to be shorter because the content is going to be very, very advanced relative to what people in crypto are used to dealing with. But it's important to understand because this is really the base level of everything in finance. And this is really understanding this is going to help you realize that you need to put your money in crypto, period, because it's really what it's all about, right? I mean, when you think about what gives something value, it's usually its cost, right? It's usually like, well, what's something worth, right? And that again always ties back to that inherent value, right? Like, things are not valuable if they're not worth something to start with, right? It's like free advice, right? Sometimes unsolicited advice is good, but when you're getting advice from somebody that's, I don't know, what's a good way of putting it?
2 cents.
Yeah,
Here's my two
right.
cents.
Like the peanut gallery type of scenario, right? The peanut gallery scenario isn't the optimal one ever, because sometimes, well, most of the time, people are just speaking from a cynical point of view, and that doesn't really add any value, right? Constructive criticism isn't the same as what you just called was your 2 cents, right? And that's important to understand. Sorry, guys, but yeah, that's important to understand because that's a big differentiator, right? There's a lot of people out there selling information that isn't valid, isn't worth anything, and people are buying it. Regardless of what it's worth or what it's not worth, people are legit buying that information. And, it's important to understand what you're buying. It's important to understand what you're consuming, whether you're buying it or not. So that's why, we have these live streams to educate the community accordingly. We like to point things out, bring things to the community's attention, because it's important to do. So I just wanted to give you guys a little background about what this episode was going to be before we actually got into it. Make sure you smash those like buttons and share with all your friends, because, again, we provide nothing but value here for free. So, let's get the amalgamation that is macroeconomics under a microscope, so that we can get this party started. Let's go in here and say what's up to the chat. See who's in here right now.
Macro.
Yeah, right.
So
Go ahead.
macroeconomics is super important because it tells you at a broad scale what's happening, right?
Correct.
And it's the big plays really that dictate the smaller plays a lot of times in the end anyway, right?
Yes, sir. I mean, that's kind of the beautiful thing about macro, right? Let me say shout out to Balliot, shout out to Brian Jones, Steve Johnson, just saying hi to everybody in the chat. Brazology, nice to see you, brother. Know you all the way out there in Australia, mate. David Morales, Hex Squadron, nice to see everybody here. Crypto Learner, Low, I think I said your name right there. Reggie Bones, going on. Hex Boy Crypto, Pay Me Hex. That's really the best name, isn't it? Pay Me Hex. Every time I see this guy's name, I get a trip out of that. Hexadente, what's going on, brother? Pablo Labo, what's up? Give me Liberty or give me Hex. That's also a good name.
Liberty, what's up?
Yeah, I'll take that one to the bank for sure. Children of the Grave, what's going on? Juicy Smolier always kills me with that name. Oh, you're in Southern California, Brazology. I don't know why I thought you was in Australia. Damn. All right, well, close enough to the Gold Coast, I guess. I wouldn't want to fly from New York to Australia. That's a long ass flight. Johnny Sachs, how you doing, brother? Welcome aboard. Michael Hex, Tripod, Chris J, what's up? Hex Toshi, the only Juanito, welcome aboard. Old Man Hex, welcome aboard. All right, we got a solid 50 on deck. So I think we can get started here. I'm just gonna start with the charts. Like I said earlier, just wanted to kind of give you guys a just kind of a high level overview, right, of just a start in macro, because macro is really a very broad topic, and as Manny just said, it's what people use really to try to garner a big picture view on what's actually happening in the economy. And the cool thing about it is that everything is relative, right? We can always look at things, right, in a nested perspective, right? And that's why when people like to say the US dollar is the cleanest dirty shirt, right? I'm pretty sure a lot of you guys have heard of this one before. I've heard that one a million times. I mean, matter of fact, when Richard Hart was streaming with Harry Dent, that was one of the famous lines that he's used, right?
Oh wow, I missed it. Yeah.
Yeah. That's a famous line in macro. I mean, primarily in the FX market and in the rates markets, and those are the markets that we're gonna end up talking about. But I'm really just gonna start with a very, very light dabbing of what they're really about.
Should I really shout out things if I'm
sure.
too noob to know, like,
yes,
or if I do know, like, so FX stands for foreign exchange market.
Correct.
Like
see you. This is why I need people
right?
to. Yes, this is why I need sidekick. Cool. Thank you. Because I'll just ramble and I won't pause. So yes, so FX stands for foreign exchange, which is what happens when you travel to a foreign country and you have dollars and you need to swap them for something else. Something else being that country's respective currency.
Has anyone in the chat done that? Have you ever had to convert?
Let us know if
currency.
Yeah, let us know if you've ever.
Did you get a good deal? Did you know if you got a good deal?
Yeah, odds are you got ripped off. Yeah. Odds are you got ripped off. For sure. Because anytime you go, like, oddly enough, this is gonna sound crazy, but oddly enough, when it comes to exchanging currencies, banks are the best bet because they're gonna give you the tightest spread. And like the further away you go from a bank, the wider the spread. And what that means is that when you're buying or selling a currency, there's an offer and there's an ask. Right? That offer is the price at which somebody is willing to sell you that currency. That ask is the bid, is the price at which somebody is willing to buy. So the spread is the difference between the bid and the offer. Right. So if you're coming in with $100 of USD and you're trying to buy, I don't know, say Australian dollars, right? And the exchange rate is 75 to 1 to 75. I don't really know what it is. I'm just using that number. That means you're gonna get $1.25 back, right, in Australian USD, because what you're doing is you're really dividing that dollar by 75, which ends up being 1 divided by 3 1/4. So you're really getting the difference between that dollar, that 3 1/4 back, which just ends up being 1 1/4, right? So that's just, simple math, but whatever. That's just how foreign exchange works. You're swapping out one currency for another so that you can use that currency in that respective jurisdiction. And jurisdiction just means region where that currency can be used, because you can't use every currency everywhere. That's the power of the dollar. That's why the dollar is a reserve currency, because it can be used pretty much anywhere in the world. And in some places, it is a preferred currency, and we're talking about places outside of the U.S., right? So this is when we're traversing a whole different arena with respect to macroeconomics, because then you're talking about more than likely a country with a currency that's really not even third world, but just even worse than that. Right? Because even in a third world country, they'll want dollars, but they won't entirely dismiss their currency. right? And I'm talking about entirely distant, like Venezuela level bad, Argentina level bad. That's what I mean. And for those that don't know, Venezuela is currently, I don't even know, like the, I don't know what the inflation rate is, but it's something ridiculous. And I mean, the money there is worth literally I mean, if you think the dollar's bad, you've seen nothing yet. And this is what people don't understand. And this is why these streams are going to be short, digestible, and I don't know how many parts, but this is going to be very important information. And, you know, unfortunately, I'm not even going to be able to give you guys everything because it's just so much. But, you know, it'll be a starting point, and that's all you can really, you know, ask for in most cases, because I didn't have even that. So it's going to be a very big leg up for most people. And whoever takes it seriously is going to be able to do a lot of things with it, because, again, the most important thing with macro is that you can literally look at any data set. It's not just currencies. It's not just interest rates. This is just where we're starting, because it's the basis of everything, right? Everything in finance is really a function of the time value of money. And that's a great mug, by the way, Maddie. I love it. Every time I see it, I feel proud. That's right.
Drink those tears. Gotta stay hydrated.
Oh man, this Hex. Can we get some sellers out here? Just to get in. Because I
think we're doing it wrong. I think like as media creators who like want to buy Hex, we should be like fudding it way more.
I know, right? I think we are doing it wrong.
We're just too honest. That's our downfall.
This is ridiculous, man. I wish somebody would actually sell Hex. It's like they try and they just fail every time. I've been waiting for a good dip for a while. I know people have been calling for like a half a cent or whatever for a while, but you know, where the sellers at? They're very, very weak. I hope they show up by the end of this week, because I mean, or no. Is it Monday or is it tomorrow?
It's Monday.
It's Monday, right?
And I guess it's going to be like a rollover.
So right. Everybody expects the big stake to restake, right?
So are you familiar with Silver, the Antidote?
Of course.
He put out a new video today, and it was an hour long, and he's got some like premium content, but basically went over some of his theories, and you know, they're always evolving because you know, because he does such in-depth analysis and like has an idea of, I mean, he's got really good ideas about psychology and about like double bluffs and this and that. And so I wanted to make sure like I don't misquote him, because he made a point at the beginning of the video like to say you should get your information firsthand from him. So
right.
The idea though is just that there's you know, there's on-chain behavior that can be seen, and that seems valuable, and so people can check that out to get more ideas of whether there's going to be some Hex coming out or not. But
right.
I mean, my attitude is I just wait until I listen to Kareem and Wales only, and then I buy, like, no matter what the price is. It's just like I need, because it's really the macro that matters, right? And like in Hex, the macro is like, you know, it's not as big as like all the macro that, you know, that you'll be covering and everything. But it's the big idea here is like, you know, when was a good time to buy Bitcoin? Like, well, any time in the past 12 years, I think Richard said today, like, you know, if you held for 3 years, then you were never down.
Right.
You never stayed down.
That's so. Yeah. What if you held for 4 years at any point in time during that period? You never ever were down. Never.
Yeah. You never stayed down.
Right. You never stayed down. Right.
And Bitcoin, you know, is I'm repping the shirt because I did a stream with Nerd Girl earlier, and she's an expert on crypto tribalism. So I was trying to prove that I'm not all in Hex, but I'm pretty much all in Hex. So.
Right. Well, you know, I don't think it's about crypto tribe. I don't really get all, like, again, I'm from a different era, crypto era. Back in the day, it was just Bitcoin. So I don't really get all of this stuff. There's good coins and then there's shit coins. That's just the way I view it.
Yeah.
You just gotta stick to the facts, man. I don't really believe in any isms. So that's just my stance on that. I don't
And
know.
that's one of the things that I think people like so much about you and your perspective is that you're so math driven, you're so
Right.
factual,
Yeah, I
and
don't really.
you're not here just for a narrative. You're not here, like you're learning, right? But
Right,
you
I
also
am learning.
have so much knowledge, and it's really cool
Right.
to be on
People can see that I'm
the
learning as I'm
experience.
doing this. I
Yeah,
clearly don't know everything. I ask questions when I don't know stuff, right? But I also do have a lot of information to share.
that's
I
what makes
think,
it so exciting to
right,
integrate
but
that.
but
And
imagine if everybody came from that vantage point, right? How much better would everything be,
wow,
right?
yeah, yeah, you're right. You're right.
Because like when you do your psychology streams, I don't get to watch them all, but I sure as hell wish I could because I know there's so much valuable information in there
Mm.
that you have to watch them because people really misprice the value and understanding what's going on in your mind anytime you make a decision,
Yeah.
right? That's I'm a person that spent his whole life making the wrong decisions. So I completely get that, the value in that, right? So a person such as myself that's done nothing but make every left step possible is going to see the value in something like that, right? Whereas maybe the average person that's has the right temperament or gets it or whatever might not really see the value in there, even though there really is value in there, regardless, right? Because checking yourself mentally is always important. Always. I don't
Absolutely.
think there's always but but here's the thing, it takes a lot of maturity to understand that. You got to bust your ass a couple of times, you know what I mean? It doesn't just come from somebody beating you down once.
Yeah,
Unfortunately.
and the quantitative side of things that you're adding, I mean that really gives people the moment of clarity. And
Mhm.
then even if you
Right.
do have an emotional side, which most people do, whether
Right.
it interacts with their investing side or not, in Hex, you just need one moment of clarity, and you need to do the right thing, which is to stake long and
I
you
mean, yeah,
know,
everybody should definitely have at least one 5 5 5 5 5 stake, bro. Everybody, at least one. Like I get people not believing in the living off the network thing. Like I get it. I've been in finance a long time, so to me, it's reality. I completely get why a normal person wouldn't believe it or want to understand that. I get that, but I advise people again to understand how businesses work and understand that businesses are never sold when they generate cash. So that's the vantage point that you need to be taking the Hex view from,
yeah,
right? And that's the difference between Hex and everything else. And this is why I don't subscribe to isms, right? Like there's good and then there's everything else, right? So everything has its utility. I'm not saying other coins aren't any good because they are. But again, you have to know where the facts are and respect them for what they are. It's not about having an opinion. I don't have one, right? And if I'm ever gonna have an opinion, I'm gonna let you know, right? And the math says this returns this returns higher number, so this is better. It's that simple, right? It's not about feelings and like, no, we're not here for that. We're here to make money. Right. So if we're here to make money, that's what we're here to look at. We're not here to look at opinions or feelings and none of that stuff. No. So we're going to stick to the facts, the figures, and leave the mumbo jumbo where it belongs. Right. And that's the thing that people miss when they come to crypto. I don't know what happened in the past 10 years or even the past four. I don't. And I don't get it. I really don't. Like, I really don't get it. So, again, it's not about community. It's not about any of that. The Hexagon community happens to be special, but that's because Hex is special. And in order to get Hex, you kind of have to already be a little bit ahead of the curve. And that's, what allowed me to come out. Because there's no way I can say the things I'm saying to the average person. Look at how people treat Hexagons. It's a clear sign that that's how it works. Clear sign. I mean,
yeah,
we see it all the time.
yeah. It's nice to be on the right side of history.
Man, it always is. It always is. I mean, we know what real Nazis are, right? They're not viewed as properly. They're never a good look. So
So to help me get my bearings here on the topic, when you zoom out all the way into macroeconomics or whichever part you're wanting to focus on tonight, like how far do you zoom out and what does that look like?
Sure. So this is the weird thing about finance, right? When you're looking at the cost of money, you can look at it from various perspectives. You can look at it from 1 week all the way out to 30 years. And crypto, we only know Hex to be 15 years and then down to 1 day, right? And that's really the widest range that I've seen in crypto, period. I haven't seen anything. I guess flash loans are the shortest. And that's probably it. And in legacy finance, the equivalent would be repo trades, which start at the beginning of the day and end at the end of the day or whenever the trade's over. But they're typically 1 day trades. But they go all the way out to, I think, 1 year, maybe even 3 years, depending the loan type. But those are a repo loan is a loan where you're giving up high quality collateral. And I think I've talked about this before. In the form of a U.S. Treasury or a municipal bond or whatever, the loaning party is willing to accept as collateral. So what you're doing is you're giving up something of value for some cash. But that item of value that you're giving up is worth X, but you're only going to get a percentage of that item in return for capital. Because the loaner, right, the entity loaning you the funds for that collateral is going to only give you so much because they want to make sure that they get their money back. And that's what it's always about, right? Risk-averse capital lenders are always going to give you X amount as a percentage of the total pot, not the total pot, because they want to ensure that they can at least recover their capital, right? It's just like when we showed that that Bitcoin as collateral for 100,000 a couple of weeks back or whenever it was. You know, if a person owns 2 Bitcoin, that's 100,000. So clearly, if you got Bitcoin and you got more than 2, you're going to meet that qualification, and it's not going to be much of an issue, right? But there's people out there that have several hundred Bitcoin for sure, so they can easily walk up to Coinbase and be like, "Hey, I got a couple Bitcoin. Give me my 100,000," and boom, you just made your year's salary right there. And all you had to do was sit around for 12 years. Right?
Not bad.
Yeah, not bad. Not bad at all. You didn't even have to do anything. So that's just one way to look at things. But you know, how long would a loan like that be? It depends on the person making the loan and what the person using the loan needs it for, right? But the reality is that almost all loans work like that, right? Whether it's a home loan, a car loan, it's somebody putting up some type of collateral, whether it be their credit, which isn't really collateral, right? That's really more just payment history. But it makes the lender feel comfortable to some degree if you don't have any capital to put down, say 10, 20%, whatever the number is, depending the area, the country, because some countries are different. In America, the standard can run from 5 to 20% for a car. For a home, it's significantly less, right? So it depends the item. It depends what it's for, and things of that nature. It's just not clear cut and dry because it depends. It's some variation there. So that's just one example. So here's a weird thing that most people don't even know exists. So when you're buying a washing machine, right? A lot of times people will be buying those washing machines on credit. When you say buy from a Best Buy or PC Ridge or whatever, just an appliance, seller, they sell you that on credit. What happens is they take that credit and they sell it forward. They sell it to somebody else. So they already make their money. They sell it to you and they make their money back. And whatever they sell it for, they're making money regardless because they're whole, right?
Yeah.
They got the product at X percentage, at X price. They sold it to you at X price with that loss baked in, right? So when they sell it forward, they're not taking a loss. They already made their money. Does that make sense?
Yeah.
So,
now is that related to like if people can issue credit, then they can basically like print money out of thin air?
bingo. This is why America is financialized. Nowadays, everything revolves on credit. And it's now flowing to pretty much third world countries like it's, hot cake. So now the whole world is literally jumping on the bandwagon. And these are the things that people need to understand when I'm talking macro. And this is why I don't really get into the minutia of what's happening on the chain, for example, because it's just not my demeanor. Nothing wrong with it, because it's good to know, right, when the sellers are done. I know I need to know, because I'm always trying to buy X. And if X is about to fucking run up 100 times, I think we all need to know. So shout out to Silver for doing the hard work, because I don't have the patience for that. That's why for me, macro is my thing. I know what I'm good at, and it's just looking at the big picture. And to me, that's very easy. I don't need to work hard for that. So to me, that's my preferred method. And it seems crazy to everybody else, right? So we all have our thing. Like what Silver does to me is respectable, because I could not sit here and look at a blockchain all day. But that man has the willpower of a freaking locomotive. I can't do it. I can't. I can sit here and talk for hours on end, right? But I can't sit here and look at a blockchain, bro. There's no way. There's no way. So shout out to him, because I couldn't do it. And the community loves that shit, because it's good info. I need to know when the sellers are done. And I think they're done now. But, man, I hope we get a surprise in the next couple of days. Thank you. Seller, please. Shout out to you. Help me out. Help everybody out. Who doesn't like a sale? I know I love a hex sale. I don't know about you guys. Ooh, we got a little math in the chat. What's going on here? Okay.
People are calculating how much their T-shares are paying them per hour, like 24 hours a day versus 8 hours a day.
That's what I'm talking about. You see? People are starting to get it. This is a business. That's exactly how that math needs to be done, because it's exactly how T-shares work, 24 hours a day. It's a beautiful thing, man. Like, once you think about T-shares the right way, you realize there's no reason to sell them. Who sells a business that's cash flow positive? Who? Unless they're trying to retire and not do anything else, right? It's a weird thought.
Yeah.
That's why I'm telling people, what are you thinking? Why would you sell a business? That's exactly what a T-share is. This is why T-shares are valuable. Richard Hart is not lying. He's just saying it how he says it. I'm hoping you guys understand it a little clearer. It's a beautiful thing.
I think with the current state of the economy, over 50% of publicly traded companies are cash flow negative, or they're losing money instead of making money.
Let's look at what is actually valuable in public market. Or shall I say, let's talk about it, because I'm really not interested in looking at it. I have zero interest in it. Most unicorns, Uber, etc., are either
companies that are valued at more than $1 billion.
Right. Yeah. Thank you, Maddie. Traded. Yes. Could you repeat that? I'm sorry.
Often in the tech sector.
Yes. Yes. There you go. Sorry about that, guys.
Unicorns.
Yeah. So unicorns are, just like Maddie said, entities valued at $1 billion or more, specifically within the tech sector. And it's just VC-backed entities. And there's a lot of hope and dreams behind the future of the business. Most of the time, these businesses are negative cash flow. Like they're just cash flow negative, meaning they don't make any money ever, and they just keep pushing money into them. And this is how they stay alive. And tech land is full of them. This is why it's at 13,000 or wherever it is now. I don't even know. I guess I could pull up the trading app and look. But it's things like that don't make sense, because you walk outside, you see what you see, depending on where you live. If you live in the middle of nowhere, America, you're not going to see what you see in LA and New York City and Miami, for example, or even Illinois, Chicago, in any urban area, right? You're just not going to see the same things that you see in a rural area as you would see in an urban area. So let's highlight that. Let's highlight the second fact that 80% of the world population lives in an urban area. So these are two important, these are two important metrics that we need to take into account when we're talking economics. This is why, when people in the middle of nowhere that are so-called economists, they'll give you their point of view, and their point of view is naturally going to be unique because they're living in an area where nothing is happening because the rest of the world doesn't live there. So why does their point of view matter? It literally does not. Yeah, well, it's funny, but it's true, right? Because that's actually what's happening. A lot of people speak based on their own perspective. They don't actually speak based on fact and reality, right? And this is the differentiator between a good analytical person and the person that's spewing garbage, right? And this is why when you look at Wall Street, it's a joke, and it's been a joke for a long time, and magically crypto has become worse of a joke. I don't even know how that's possible, but here we are. I now that I sit here and think about it, yeah, I can see why. But we're going to try to rectify that issue, at least within the Hex community. We're definitely going to rectify that issue. But it's just incredible because people don't understand. They're taking money and putting it in a furnace most of the time.
When you say it's a joke, do you mean that there's a disconnect between reality and between like the financial reality and like what's happening in the market?
Yes, that's exactly what I mean. So let me give an example. Say you live in New York City, like myself, or any urban area. Odds are, if you have to travel far to work, you have to travel past some type of homeless population to some degree. I feel like that's a guarantee no matter where you are in the US and probably the globe, because I've been to many major cities and it's all the same story. Always. Doesn't matter if it's Frankfurt. I think you know what? I'm not going to speak about Vienna because I don't really remember. I was too drunk that whole time. But even Spain, wherever I was at there, it was homeless people outside in the middle of the night. So Spain it's not even the type of place you think of, right? When you think of homeless people, it's not, but they're everywhere. So the more populous the city, the more homeless people in general. That's a pretty good tactic to think of because, more people, more homeless people, 1-to-1. And by what I mean by 1-to-1, it's a proportional relation. That's what I mean, meaning if there's going to be more humans and there's going to be more of that thing by default. Is just a function of the network effect and how humans grow. Again, everything is related. It's this. I'm telling you guys, I'm not as smart as I sound. Once you're able to connect all the dots, you're gonna see it's really, really easy. It's not that hard. So the demographics are important. The populations are important. And this is another reason why you want to be in crypto, right? And let's talk about this for 2 seconds, because I want to get into these charts. We're already half an hour in, and we're all 20s, 30s, whatever the case is. We're all adults at least to some degree, right? And the thing I want to highlight is the fact that there's a serious retirement problem in the world, not just America, but worldwide. And there's no defined benefit plan really anymore. And if there is one, it's not there. And by defined benefit, I mean a pension plan. So let me start with that. And a defined contribution plan is something like a 401k if you're a regular salaried employee, 403b if you're like a teacher or something. I forget what the other ones are. There's a bunch of different ones, but they're basically all personal retirement vehicles where your employer administers fund or the asset plan for you or the investment plan for you, and you're able to pick from a lineup of investments, and from that lineup you plan to make retirement money. But it's never as pretty as it seems at first because those funds actually don't pay you anything. They're trash in reality. And then you also have the Social Security fund, right, which is everybody's safety net, quote unquote. That was literally set up as a Ponzi scheme back in the 60s. It's still a Ponzi scheme today. And the Ponzi scheme is close to failing because guess what? The human population in the US is only decreasing in size every year. And on top of that, the working population is decreasing in size every year. So what does that mean? That means you have two factors attacking the one thing that supports this Ponzi scheme at the same time. So it's getting attacked from two sides. And here's the thing: I'm not even going deep into this analysis. I'm really going to keep it very high level. But the fact of the matter is that when you have a number that's dependent on two factors growing and they're not, that's clearly a problem. I don't think you need to be a mathematician to figure that one out. Right.
Yeah. So to kind of summarize and just show kind of like the dots that you're putting together for me,
Sure.
I think like it makes sense, right? In this macroeconomic view of how money works, right? It's just like as many scams as you can put together all in one. And so the first one is population growth. So if you get everybody to put their economic energy in and the number of people keeps going up, then you can have something that stores value, and you can hide the fact that you're stealing some of the value away from people. And so for about 1 billion years, right, the population of the Earth went up until about the 1970s. And so
yeah, you're right. It went up to 1 billion, and then it stagnated, and then recently is when it started exploding.
Yeah, and so you had this huge change, right, in the way that the world has ever worked, because you always had a population explosion until recently when the developed economies have come. And so then you see the implementation of stuff like a retirement plan, where literally they set the age at the median age when people would die, right? And
Literally.
so half the people would never get the money that they put in. That's how
Correct.
they started it. That's how they were able to fund it in the first place.
That was the anticipation.
Twice as many people paying in as there could be cashing out, by definition of the age and the average age of death, right? And so that's the start, and that's the start. And then the second part is then as the population boomed, then more people were contributing, and now we're getting to a point where the population is decreasing, right? And people are living longer, and so even people moving into a city from like the countryside, right? Like in any developing country, right? That causes a centralization of prices, right? And causes prices to go up, and people to be okay with it, because it's like it's creating scarcity whenever people could be more spread out. So
right.
that makes a lot of sense to me, what you're saying.
Right. That's basically it. You start right at level 1, you get up to level 5, you plateau for a little while. You make up some nice plan that makes everything look good. You line it up so that, yeah, by the time you're about ready to die, it's time to get paid. So now it looks good. All right, great. Sign everybody up. Everybody's good to go. Population booms once again. Everybody thinks everything's good to go. Everything's looking great. Everything is financialized now. We have all the bodies we need, filling in all the holes we want, plugging in all the gaps that we have and filling them in on top of that. But now, just like Maddie outlined, we're reaching a point where those gaps are now being left open, and there's nobody there to fill them in. And that's exactly. Go ahead.
Do you think like the phase that we're in now is like the digital population of the world is growing?
Yeah, that's exactly
whereas the
what's
physical
happening.
Is not. And so
those
of us who are first in the digital space of money and crypto, like that's a good place to be.
So it's interesting you brought that up, because that's exactly where this talk is going.
Cool.
Yeah, I mean, that's exactly where, because that's the default, right? Why would you go anywhere else? There's nowhere else to go. So let's get this party started. We're going to get right to that. So hold that thought. I want you to bring it up again at the end because it's going to be very important. It's literally perfect. So this is my man Axis Alive. He hooked it up with this. I always love to just look at it for a little bit because I just love the little monocle with the mustache
This is
on the wheels.
amazing.
It's just a
The
beautiful
whole
thing.
thing is awesome.
It's just a beautiful thing. So shout out to him. And let's get with the disclaimer. The information displayed in this broadcast is known to cause increased amounts of FOMO. Wells only and his guests are not responsible for any losses you may accrue for having weak hands. Do not forget, folks, we do not sell cash flow positive assets. I mean, they're not assets otherwise. Let me just highlight that. So we're going to keep it moving here. So chart one, everybody's favorite, first 452 days live. Now, this is including today's prices. From now on, I'm including present day's price, typically around 7 o'clock, which is the closing price for most of the charts that I'm getting. So for T-shares and for HEX, that's typically what's going to be. For Ethereum, you guys got to remember this is an apples to apples age comparison chart. So this is Ethereum when it was 452 days old, and this is Bitcoin when it was 452 days old. So Bitcoin is the yellow line with the blue hue, which is flatlined, basically because we still have about 110 days before the first price action on the live network on here with respect to the data source that I'm using. And Ethereum is the orange line with the orange hue at 900% or 901% rounding up. The Hex index is the pink line with the white hue at 4,148% rounding up, and T-shares are at 7,085%, which is the pink line with the yellow hue, and post big payday Hex is at 173%. It's an amazing thing.
Off to a good start.
Off to a great start. Hex big payday, post big payday, we're at 113 days. The first halving is at 516%, which is the orange line with the blue hue. Not bad, Bitcoin. But of course, the supply reduced 50%, right? From one block to the next. So it should be ramping up like that. Shouldn't it? Yes, it should. That's the beautiful part that people don't get. Anyways, moving on. The Hex Big Payday Index is at 173%, which is the orange line. I'm sorry, not the orange line, but the pink line. Then we have the third halving index, which is at 136% rounding up, which is the green line with the blue hue. And then we have the second halving index, which is at 110% rounding up, which is the green line with the slightly lime hue here. And I mean, I love to talk about the chart every time I see it because, it's just people don't get it. They're impatient. They don't understand what just happened in Hex, and it's okay. I get it. That's why we do these streams. This is why I do this twice a week to try to help people understand, and sometimes even 3 times a week, to try to help people understand. You got to be patient. Whatever the rest of the market is doing is completely irrelevant. And the reason it's irrelevant is because this is the only crypto in the entire market. I've explained this before, and let me explain it again. Why is this the only crypto in the entire market? Because it's the only one that's actually completed. Let me know which other coin is completed. I'll wait. Don't worry. I have all night. I hope you don't have anywhere to go, Maddie. I'm literally waiting to. So go ahead. Put it in the chat. I'm waiting.
Yeah.
Don't type too fast, guys.
A Nerd Girl has a Hugs coin that has no monetary value. I think that one's finished, but that doesn't make it a currency.
Yeah, it's not a currency, no.
So
crypto was not invented.
I can't come up
NFTs.
with anything that's decentralized, that's more immutable than Hex, and that holds value because it monetizes the time value of money, which is what money is supposed to do. So that's it.
Pretty much. Yep. I mean, again, we like to stick to the facts here because the facts are what help us make the right decisions, right? I mean, imagine being alive and picking between Coca-Cola and Apple and picking Coca-Cola instead. I mean, I'm sorry, but you look like a moron. Period. I mean, yeah, both went up, but comparatively speaking, did they really? No, only one went up, right? And that's the whole point I'm trying to drive at here. Yeah, you can buy any other coin, but you don't know what you're buying. You don't know what you're buying. You know what you're buying here. This is the future. Right? So it's not about picking a tribe. It's not about picking an ism. It's about making the right choice. Literally, that's all it's about. I understand that demeanor. I do, because human beings are naturally tribal. So I get it. But that's not my demeanor. I don't comprehend that functionality whatsoever. I'm like fucking, what's this dude's name? Spock. I don't get that shit. Does not compute. You know what I mean? Like,
yeah.
I don't get it. Like, I'm not out here picking the coin that I like the best because my homies like it. I could care less what my homies like. In fact, most of my homies aren't even in Hex. And good luck to them, because they're going to fucking need it. Because I'm not, right? Like, it's simple math. And some people, no matter how smart they are not willing to do it. And mind you, I got guys, these are my buddies that I went to college with. We used to help each other get our work done. We talk about finance, economics every freaking day, right? And even they don't get it.
Really?
Yeah. Guys, I'm not joking when I say this. We're at a seminal point in time where people are straddling the line, right? And they're straddling the line just like Neo was in the Matrix, because he didn't understand the significance of what Neo was telling him, of what Morpheus was telling him. I'm sorry. He didn't understand it because he was too naive, too gullible. He wanted to believe in the system. Don't believe in something that's not there to help you. It's foolish. And again, I work on Wall Street. There's a reason I can't show my face. Listen to what I'm telling you. It's the antithesis of what they want you to hear. Don't be a fool. Listen.
I just rewatched The Matrix recently.
Well, boom. There
because
you go.
someone in Hex reminded me of it, and I think, yeah, Neo like represents the everyman who like could be more in touch with reality,
but
if he could stomach it.
Fight Club reminds me of that too.
Oh yes, I love that movie.
That's a great movie. That's a great two great movies that if you haven't watched, you should.
It's almost like the mind, like, it creates this alternate reality and like excludes the truth because your mind can't handle it, and so there's like a rejection of the truth that happens. And I suspect that that's probably what's going on psychologically with people who are capable of understanding Hex, but they aren't choosing to, right? Or they're not ready. They're just not ready.
Correct. And then that's what it is, right? And here's the thing. I'll completely agree with that, because when I first came across Bitcoin and then Ethereum, it was the same process, right? We see it. Well, okay, this is interesting. It makes sense, but it's too good to be true. This should have to be a scam, right? Like, I was telling interesting little story. I was telling my mom about Hex for the first time today. And she's like, well, where the fuck does all this interest come from? Like, she doesn't get it. And I had to explain to her, look, man, this is a lady that, spent her adult career in finance. Like, she worked at a freaking bank and all that BS too. So she knows and she gets it. So when I explained to her, look, this is code, this is a system, it's built to be dynamic. It's not going to stay that way forever. It's, it's not the way it works. It's 40% now because you're a first mover, early adopter, right? It's just like when you get all these airdrops from these exchanges. Only with Hex is going to be infinitely better because you're at the start of the new financial system, and people don't get that shit.
Well, the OA needed a way to stop Hex from being undervalued during the first year it was offered, right, on a daily sale. And so the genius move was for the OA to recycle a little bit of the ETH to stop the coins from being accumulated too much by people who would dump them then continuously throughout the product. And so, but the OA doesn't want to keep the coins, right? Because that would centralize the project and not be the best strategy. Instead, the OA is building people's hands, making them stronger by rewarding people who are staking longer and distributing the Genesis coins that way.
That's
so
right.
It's a brilliant, a brilliant tactic that I haven't seen with many coins. I've maybe seen one other coin, one or two, that have realized that the distribution mechanism needs to be like a surprise, and it needs to go to people who are going to hold. Right. And if you don't have that, then every project fails, even if you get lucky with a founder who's not going to rug pull.
Correct.
And even if they're monetizing something valuable, which most of them aren't, like it's just fake digital scarcity, copy paste.
Right. Exactly. But that's what it is, right? You nailed it. And that's what Hex eliminates, right? That's literally what a Hex eliminates. All right. Yeah. At least it did. I don't know yet, but we'll see what happens in the future. but like the main thing I want to highlight is that, when we're looking at the first and third halvings here, and now the second, we're looking at the second is picking up. And now that the second is picked up, the third is looks like it's kind of going to pick up too, because it was kind of lagging, but now it looks like it's kind of picking up. But look at Hex, right? Hex has been defeating this negative narrative the whole time. Everybody's been fudding it, and it's just been going sideways. Nobody looks at rates of change, and that's rule number one. Write this down, guys, for macro. Always look at rates of change. Always look at rates of change. If you're not looking at rates of change, you're missing the picture. And the reason why is because the rates of change let you know how the tide is moving before it even moves, right? It's like being in a wave and being under the wave and seeing how the wave is breaking before they break, because you're catching what's happening inside of the wave. Does that make sense? It's like breaking the wave down into parts. That's basically what you're doing when you're looking at things like that. And that's why I like to give people that bit of advice, because that's really what works. When you're looking at rates of change, you catch those movements before everybody else does. And that's the whole point, right? This is why I'm in Hex. This is why Hex is the only coin that I own, literally. Like I keep my liquid capital not in Hex because I refuse. I keep it in other coins, and I won't even mention them because they don't matter. They're just projects, and they're not completed. So why am I going to talk about them? Everything could change tomorrow, and I could lose all my money, right? And that's reality, right? That's what a security is. This is a promise, right? And if you don't know what the Howie Test is, look it up. Richard talks about it all the time, right? So,
they made a Howie coin.
Did he?
It was like pretend. No. Like the SEC like made a pretend Howie coin.
Oh,
and they said that it was like ICOing to like educate people.
That's fucking funny. I wonder how many morons bought it. Somebody
it was like a fake website, and they like imitated all like the ICO marketing strategies, but they didn't actually offer the coin. They just like if you like clicked enough, it was like, yeah, this isn't real.
Yeah, like stop
you
playing.
Just got educated.
Yeah, we were just messing with you, and you fucking failed. That's too funny, bro.
The one thing that I am realizing about this chart that I didn't realize before for some reason is that when Hex is 4 years old, then we'll be able to see all of the Bitcoin data, because you're just showing, as long as Hex is old, what Bitcoin did. So we're really just seeing pieces of the Bitcoin chart.
So let me explain. The first halving is what happened after November 28th, 2012. Right? So every point in every instance in time you're seeing is from that moment forward. And for the second halving is from that moment forward. Oh, I'm sorry, it's from July 9th, 2016 forward. And for the third halving is from May 11th, 2020 on forward. So we're at 113 days apiece from each respective date on forward. That's what I'm tracking. I'm tracking apples to apples.
You've segmented the data.
Correct.
And you're aligning it based on the age.
Time. Exactly.
Based on how old Hex is now.
Correct. Awesome. I'm giving a true apples to apple comparisons, and with respect to the return streams, because again, the return streams is what gives us the actual behavior of the instrument, not the price. And this is this is really the common mistake that most people make. And it's a fair one to make, because you're not going to assume that, right? Unless you understand what you're looking at, you're not going to assume that. So that's perfectly fine. It's an honest mistake, because even I used to make that. And until I figured it out, I didn't know. So what you really want to look at anytime you're looking at any data set is really the rates of change of that data set. It's not the actual data in the data set. So that's one interesting quant tidbit that I'd like to share with people there if they ever want to actually sit down and play with data. What you want to look at is really how the data changes, how it behaves. And the beautiful thing about that is that there's a million different ways to do it. I like to keep it simple, but there are some guys out there that they'll build a whole model around a whole theory that they have, and that'll just be what it'll be, and that's just it. But yeah, I just love to talk about this chart. What's up? Go ahead, man.
Thank you so much for having me on. I got my prior engagement now, and
no problem.
But I've learned a lot. I'm gonna catch the replay, and if you're still on when I'm done, I'll be back.
No problem.
All right. Thanks.
I don't think I will be, but we'll see. No problem, Manny. Have a good one, brother.
Awesome. Thanks.
Bye. All right, guys. So we're gonna keep it moving here. I'm gonna remove my little square because my little square doesn't matter. So give me a second. All right. Okay. So the T-share, the Ethereum chart, and the T-share, the Bitcoin chart. The pink line is showing the value of T-shares as a percentage of Ethereum, and right now we're at 8.43%. The orange line is showing T-shares as a percentage of Bitcoin, and right now we're at 0.27%. But again, the T-shares are maintaining their value, even though the coins are pumping. At least they were. I'm not sure if they still are. Let me see. Just for posterity's sake. Oh no, Bitcoin's a little down, and so is Ethereum relative to their highs, which is great. Let's see where Hex is. Whoa. Alrighty, I haven't looked at the chart in a while. That's almost at 9.5%, which is great. So as always, T-shares holding it down and showing it so on the chart. Hex Payout Metrics, daily payout for the day was 63.2 million Hex from the system. Payout per T-share is 5.83 Hex per T-share. The total shares are at 10.84 for the day. 10.84 trillion million shares. Now everybody's favorite chart. This is my favorite chart. Payout per T-share sum index is, oops, sorry guys, 147,602%. The daily payout index is at 11,423%. Total T-share index is at 2,163%, rounded up. Go on to the next chart. Payout per T-share is at 5.83, and as you guys can see here, also shows you the total T-shares is down at 10.84. Now this is the X chart with the payout per T-share sum line with the payout per T-share index. And as you guys can see, payout per T-share sum is starting to go almost vertical. I'm guessing within a month it probably will be, but we probably won't be able to tell. But on a big enough time scale, that's definitely what it's going to look like. And when we look back on this point in time, we will all be wondering, what the hell were we thinking? Ever talking about anything negative with respect to Hex, because this line is going to continue going up as long as you're staked. So if you're, staked for a considerable period of time, be ready to enjoy the ride, because there's going to be a lot of airdrops going into your wallet on a daily basis. Well, your staking wallet, that is, given that your Hex is secure. Moving on to the next chart, and we got the T-share rate versus the APY. And as we can see, the T-share rate is already, firmly above 17,000 Hex per T-share. I think in go.hex.com is at 17,008 or maybe 17,010. So it's just interesting to note that APY is firmly near 38%. Eventually, I think we're going to traverse that line, as long as people keep buying and staking, and people keep ending stakes at the. I mean, if things stay as is, this APY could easily increase with the T-share rate going up, if it does start to go where me and Kareem think it's going to go. And here we got T-share value versus the T-share rate. And you guys basically know that this chart is basically the one to a degree. And right now the T-share dollar value is at $154.17, and that's the pink line with the blue hue. T-share rate is the yellow line with the orange hue at 17,096 Hex. I mean, this is a constant thing every day. We have Monday coming up, and Monday is going to be a big day for Hexagons. Basically, if they're staked, we're all going to be watching what happens with that sizable stake that's going to be ending on that day, and what that whale plans to do with it. So we'll see. We'll be watching, that's for sure. I'm going to be on a stream with Cabana Crypto on Sunday, actually, at 7 p.m. I think it's going to be. So be on the lookout for that. We might have a special guest as well. Not quite sure if he's going to show up or not, but you guys aren't going to want to miss that one, because we're going to definitely be talking about the stake ending and how it might or might not affect the market, things like that. So shout out to Cabana. Looking forward to that stream on Sunday, 7 p.m., guys, Eastern Standard Time. Let's see here. And here we have the cost of 10,000 Hex. So let's talk about this chart for a little bit, because I never really harp on it too much. But what we're seeing here is that the cost of 10,000 Hex is $90.18. Cost of a T-share is $154.17. And the T-share rate is 1.709667 Hex, which is just the same as multiplying the 10,000 Hex that's needed for a T-share, which is where the T-share rate comes from. So that's why I want to let you guys know that. So what is this chart saying? This chart is saying that the 10,000 Hex, which is where we started with the T-share rate, right? When Hex first started, the T-share rate was 10,000 Hex per T-share. And that currently costs $90.18, right? So the question then becomes, is there less Hex, or is Hex more valuable? That question is for you to answer. That is the question that you need to think about whenever you see. Yeah, you know what? I agree with Kinetics, and I'll talk about why a little bit later on the Magic Hex One. Nice name, by the way. Well, actually, you know what? I'll talk about it right now. The reason why is because of the duration of the stake. And that's one thing that people don't understand a lot about the system. When there are short stakes in the system, no matter how big the stake is, if the stake doesn't generate a significant enough ROI to affect the T-share rate, then the T-share rate is pretty much going to stay doing what it's supposed to do. And the reason for that is because, think about it like this, because this is basically the best analogy that I can think of right now to help you guys understand. When the return generated by a stake is not bigger than the move in the T-share rate from when the stake started to when the stake ended, if that return isn't bigger, then the factor by which the T-share rate is divided is not going to be big. It's not going to affect the T-share rate because the factor is going to be less than 1. So that's something I want you guys to understand. And let me repeat it again. And I guess I should have wrote the timestamp down for HEXLIVE, but I got a pretty good idea. So I'll shoot him a DM after this. The reason it might not affect the T-share rate is because of the duration of the stake. I understand it's a sizable stake, but as Patrick from the Crypto Sparbuck community pointed out to me, or Crypto Sparbuck show pointed out to me, shout out to him and Albert. He pointed out to me that the duration of the stake isn't enough to supersede the increase in the T-share rate during that time. Thank you, Rosology. Appreciate it. During this time, or during the stake's length. So because that return isn't greater than the move in the T-share rate, it's probably not going to affect the T-share rate when it ends. So that's some information for you guys to take home and chew on right there. But again, the thing to understand about this chart, like the thing I want you guys to get from this chart is you have to ask yourself the question, is it that HEX is undervalued? Or is it that there's not enough HEX floating around? So that's right, because we have 10,000 HEX. At the beginning of this ride, 10,000 HEX was the T-share rate. Right now, we're 70% above where we started. 71% pretty much. And with that, the T-share rate is at $154.17. Now, let me see something because I really didn't do the math on this. 154.17 minus 90.18 equals divided by 9.18. Yeah, that's a 70% difference again. So the question then becomes, is HEX cheap by 74? Is HEX just not available? Or is HEX cheap? Right? That's a question you have to ask yourself. I think HEX is cheap. I think it's available. So I keep buying it as much as possible. So that's my point of view on that. So that's why when I look at this chart, I look at the rate where it is, and then I look at where the T-shares are. This is telling me that, you should probably buy HEX because this line is going to move. And this chart is going to be the chart that kind of dictates that motion and the velocity of that motion. And this is kind of the thing that people have to take into account. Listen to the Germans. Yeah, word up. Listen to the Germans. But yeah, that's kind of the thing you have to take into account is the duration of the stake. The duration of the stake does matter. It's not just the size of the stake, unfortunately. So we might not get the fireworks that we're expecting, but it doesn't matter because what matters at the end of the day is that the sellers disappear. That's what's going to allow HEX to really take off. In conjunction with the people finding out about it, of course, which people are. Don't think they're not. And this chart is expiring shares all time. And this is as of today, right before I streamed. So as you guys can see, we're coming up on some pretty sizable stakes. So what might happen is that when this comes out and hits the market and restakes again, we might see a nice price spike. But I'm not really too sure about that. I have to look more into it, see what might or might not happen. You really have to get into the nitty-gritty of the stakes that are within this move right here. So yeah, right, until he restakes for another 30 days. Yeah, I don't know. I don't know why these guys do that. I don't think they understand the system when they do that because they're not really doing anything but just generating more HEX. And it might not even be beneficial from an ROI perspective based on what it might cost them to generate the transaction. But I don't know. I'm not doing it. That's their problem, not mine. So I don't get into all that. But moving on. So this is a chart that kind of yields what might or might not happen with the way inflation plays out in HEX and what might or might not happen with potential little mini big payday, post big payday ramps that we see from the Hex system and the expiring shares that we're going to get. And my favorite charts personally, the correlation charts, they're both 0 for Bitcoin and Ethereum. But as I always like to highlight, the x-axis shows the Ethereum, or I'm sorry, shows the Hex returns. And it shows how they're typically on the positive side of the x-axis, which denotes how it's positively skewed, the return stream for this asset, meaning it's a positive. It's just a positive asset to hold, just even from a price perspective. Like, you just cannot lose with Hex. And this is something that I just have to highlight because, again, the math is what dictates what you should be doing. So yeah, so let me answer that. Pay Me Hex asked me what do I think about the $1,400 stimulus check. I think people will probably put it into crypto because, let's be honest, what else are they going to do with it? I mean, yeah, people that don't believe in crypto will pump it into stocks, but, you know, that's not really saying much. But, you know, I think it's going to drive the market up regardless. So, you know, I think it just has to happen first. And that's what needs to happen. It's not guaranteed yet. It just passed the House from what I saw. I don't know if the Senate voted on it yet or not. I haven't really been keeping track on it. But if they do and they pass it and then it goes to Biden and he passes it, then yeah, you know, people will get $1,400 and then we'll see what they do with it. But it's fair to assume that the market's going to pump if they do. But again, until then, be well advised to maintain your distance from risky assets because, you know, yeah, Bitcoin is looking weak again. And it's just at this weak point where I'm not so sure it's going to make it. But, you know, I don't hold any, so I'm just speaking from an objective perspective. Don't mind me. This could completely go sideways and just continue on higher. I'm just saying this isn't the time to buy just yet. I would hold up if it was me, right? If it was me. Oh, okay, so Biden signed it today. Then there you go. If it's on his desk and signed it, then you go. $1,400 for everybody. Congratulations, guys. I don't know what good that's going to do for anybody, but all right. Well, whatever works for them, right? Until it no longer does. So enjoy the show, guys. So as you guys can see, the Hex to Ethereum correlation is also 0, and just again, similar to with Bitcoin, the Hex returns are positively skewed to the right, whereas Bitcoin is also pretty spread out, right? It's not really positively skewed, as you guys can see. If it was positively skewed, most of the returns for Bitcoin, which is on the y-axis, would basically be grouped up here. And this chart's grouping would basically be over here. It wouldn't be spread out over here. And the same thing with Ethereum. It's primarily, for Hex, it's primarily spread out where it should be, which is on the right side. But for Ethereum, it's spread out all over the y-axis. So there you go. Okay, so Xfish is saying that they're saying that this weekend it will be paid to those with direct deposit. So there you go, guys. So this chart is the payout per T-share with the adjusted Hex price with the Hex price. Hex price is down here, and I think I took this right before we started, and the market was at 9 cents then. So we're at 9.4 cents now, so you can adjust accordingly mentally. Payout per T-share today was 5.25 cents. And the adjusted Hex price is a whopping 6.15 cents. And I'm guessing you could say 6.2 cents now that we've gone up half a cent or so since I took this little snapshot earlier. And I mean, this chart shows value of 1 hex if you're staked because you're receiving, 5.83 hex per T-share. So just to keep it even keel, we'll take 1 hex into consideration only because, again, the objective is the system is similar to Bitcoin's, right? Where hex is the unit of account because hex is an actual store of value and it's divisible and it's a unit of payment and all of that, good stuff. It's fungible, right? It's not non-fungible, very important. And what fungibility means is that you can take it from A to B and use it, and anybody will accept it. Right? It's a form of money, meaning it can be used to pay for things in multiple places, not just in one place. It's not just used for one thing. So, and when you're taking a big snapshot of that quantity of hex, right? Each hex is the same. That's what fungibility means. So you can use it everywhere. That's why. So we'll keep it moving. And this is the, I didn't update this, but it's basically the same. It's just a little lower. 0.17 hex, price to earnings. I mean, again, the cheapest assets probably ever, man. I mean, look, guys, I'm gonna get into this. This is great. And again, I just want to highlight that we're way below this. I mean, by magnitudes, right? 5 times cheaper. And now comes the macro talk of the stream. And the macro talk part 1 is really just talking about the cost of money and how it rules everything. And this is why Hex is the only coin you will ever hear me talk about like this. There is another coin that I like that I recently came across, but it's not really a coin. It's another thing. I'll get into that in the future. But again, you guys know I'm all about positive, cash flows that are positive, right? Positive cash flow generating assets. That's all I'm about. So anytime you guys hear me talk about anything, it's going to be from that perspective, from that vantage point. We always want to make our money work for us. We don't want to be working for our money. And this is why understanding the cost of money is number 1. And this is why this stream is going to be extremely short, because this is the most important rule, right, to understanding finance, period. If you understand this, you can understand why I know what I know to be a fact, even though so many disagree with me. So what is the cost of money? Interest rates are cost to borrow money or capital, and that's what determines how freely or how unfreely money flows, right? So if the cost of capital is high, meaning it costs a lot to borrow said funds, you might or you might not borrow them depending on what your balance sheet looks like, right? And the lender might not like your balance sheet, right? Meaning it might not like your asset versus liability mix, right? And this is what people look at when they're determining what your cost of money is going to be. So say, for example, you go try to borrow a car, and the lender sees you suck at making your payments, but you have a nice balance sheet. They might give you favorable terms from that perspective because they see that you have some collateral that they can lay a claim to, put a lien on, right? And a lien is when you take a loan and that loan is backed by that asset. That asset is what has that lien on it. The lien is a claim on that creditor that lend you those funds or whatever they lend you to do whatever with those funds, right? So that's what a lien is. But again, understanding the cost of money is very important because the cost of money is what dictates where capital is going to flow, right? And interest rates are going to be the thing that kind of guide where flow goes, right? And the reason for that is because everybody wants to make a return. Nobody wants to not make money, right? I mean, this is why crypto is so popular, because everybody wants to get rich quick, but nobody understands what that actually requires. So that's why you guys are, watching my streams, because I'm going to give you that relevant information. And that relevant information states that capital flows to the highest returns with the least friction possible, right? Now, again, what is that really saying? And what that's really saying is that particles always take the path of least resistance. Everything takes the path of least resistance, right? This is why when we're kids, we lie. We lie to our parents about the stupidest things when we're kids. And this is why, because we want the least friction possible. Capital flows are no different. Money wants the highest return with the least risk. And that's why in legacy markets, risk-free assets, as I have highlighted here, are assets like US Treasuries, and stable coins are the equivalent in the crypto market, because again, they always maintain their fiat equivalent value. And for now, the crypto market is hell bent on keeping a tie to the legacy system. So stable coins are what constitute as the plumbing for the crypto financial system, for the decentralized financial system. And for the legacy finance system, that item is US Treasuries, right? So US Treasuries come in the form of T-bills as short as overnight, which are called cash management bills, all the way out to 30 years, right? And within that time spectrum, you're going to have different costs for money. So depending on what time frame you borrow at, that's what your cost is going to be based on, right? So what does that mean? That means that if you borrow for 30 days, you're going to pay a certain interest rate. If you borrow for 30 years, you're going to pay another interest rate. Now, if you're using, let's say, a US Treasury to borrow, you're going to get a certain percentage of capital lent out to you when you borrow with a US Treasury as collateral. Whereas if you come in with something like stable coins, right, just to give an apples comparison, you might get another value. What's going on, Bali G? Thanks for joining us, brother. You might get another value, right? And when you come back to give that item that you borrowed back to get your high quality collateral back, the expectation is that you're going to get more than what you borrowed, right? That's the expectation. That's why people are willing to pull up $100 to borrow 80 to make back 60, right? Because what's actually happening here is that they have a pool of capital on the side, and the US Treasuries or the stable coins are what's being put up to generate leverage for whatever trade the entity is trying to make, right? So that's how that works. At least that's one of the aspects of how it works. It can work in a myriad of ways, but I'm going to give you the most basic and simplest way so you can kind of understand from a very basic high level what's actually going on in the background. This is why you'll see stable coins pump when price is going up. This is why you'll see stable coins. Oh, I'm sorry. I think I said that backwards. That's why you'll see stable coin prices dump when cryptos are pumping, because people are selling stable coins to buy Bitcoin, to buy Ethereum, to buy whatever coin is out there. And the reverse is true. When stable coins are going up in value, you'll see that the market is going down. People are selling their risk assets, meaning Bitcoin, Ethereum, and any other coin that's out there, to go into stable coins. Now, here's a fact that you have to understand when it comes to what I just stated. That will never happen in Hex. Why? Because Hex going down literally doesn't matter. Because you get paid every day. Because you're staked. Right? Like the system incentivizes you to never ever have to sell. I mean, this is important to understand. Because this is why we're having this macro talk. So you guys can comprehend the importance of what it is that you own. Right? You own something that doesn't require you to ever have to sell it, because it generally pays you just because you're breathing. Okay? Just because you're breathing, it pays you. You have to realize that. That shit is it's fucking crazy. People don't get that shit because it's fucking crazy. So just understand that. You get paid just because you're breathing when you own Hex. Now, why is that? And that's because you bought the Hex, you staked it for X number of days, whatever it was, and you staked whatever X quantity of Hex it was that you bought. So the systems is going to pay you out with respect to that. And that is what the economic mass is. That's mass times acceleration. Mass is the quantity of Hex you bring into the table. Acceleration is the time duration upon which you're staking the coin. That's what's going to give you the T in the T shares, right? That's the force by which you get paid. So that's another way to look at force equals mass times acceleration. Alrighty. So yeah, so understanding both of these systems is the key to understanding flows on a short-term basis, but also on a long-term basis, right? Because again, this is what this talk is all about. I mean, I'm here to kind of help you guys understand that you need to be in crypto, right? If you want to not be in just one coin, that's perfectly okay. But you have to understand that at this point in time, the financial construct of our global economy is one such that you need to be in crypto, period. Right? No, but I haven't actually been able to track. I intend to, but there's only so much time in the day. I haven't been able to track the hex time value lock over time. I do plan to. I do also plan to track the growth in the user base, not just the staker base, but just in the user base, but like wallets and whatnot. But this is all stuff that's going to come in the future because I really have to change the construct and the format of my streams to allow myself to do these things I want to do for the community. So I'm just really going to have to change up a lot of things and how I do them just to make it beneficial for everyone because I want everybody to learn and everybody to benefit from the information I have to share. And it's, it's just invaluable information, man. It really is. So I'm going to try to relay it in the most digestible way possible. And it's starting with this. And this macro talk part 1 is about the cost of money, understanding that what you own generates a yield that actually doesn't even necessitate the need for you to have to sell it to generate yield elsewhere because it gives you all the yield you need. It's important to understand that what you own is something that generates the yield if you stake it 4x5, meaning 5,555 days, the max that the system allows. It gives you the ability to generate returns that all-star hedge fund managers cannot and have not. So let's talk about that for a second. There's this gentleman called Stanley Druckenmiller. He is by far the most famous trader on Wall Street. The most famous trader on Wall Street. I think his track record might be 30, 40% compounded annual returns. Now, what you don't know is what it took for him to make those returns. You don't know what it took. And until you don't do the research, you can't even imagine. Me telling you will do it no justice. But needless to say, that man has been trading or was trading since the 80s, early 80s, maybe even late 70s. It might have been 79 when he joined Soros and Jim Rogers at the Quant Fund. But then he eventually ended up having his own Duquesne Capital. And I mean, the guy's a rock star. He is a rock star. He understands how money works, how liquidity works, everything works. And we're going to go over liquidity and interest rates in detail in the next macro talk. This is really just, again, the tip of the iceberg, guys. This is going to be, you guys are going to love this shit because I thought it was going to be something I could just get away with in one stream, but no. It's too much, it's too good, and it's worth breaking it down into digestible streams because understanding the cost of money and how people view it is the key to understanding where you need to put your capital. Seriously. You want to put your capital where the least friction exists because that's what generates the highest returns because over time, right? Because what's happening here is that you're not taking those nicks, you're not taking those cuts, you're not taking those losses, right? When you're trading, you're taking those singles, those doubles, those, you're aiming for home runs, you're aiming for triples, you're aiming for all of these things. Yeah, there you go. Balaji laid it out for me nicely. Thank you, Bala, because I don't remember the numbers per se anymore. It's been a long time since I looked into it or read about it. Duquesne Capital is Stanley Druckenmiller's private hedge fund or his own hedge fund, his own fund after he broke away from the Quant Fund after it disbanded. And it posts an average annual return of 30% without any money losing year. Now, the important thing to understand with this gentleman is that nowadays he trades his own capital, and I think if he trades any outside capital, it's because he allows it. Another person is Jim Simmons. He is a rock star. And he does it all with math. He doesn't even look at markets like that. Like, he started looking at markets to understand, but you gotta look into that guy. We don't have enough time to talk about him. He's somebody to emulate. He's the boss. He is the boss. He is the boss. Yeah, that's a good one, Donald. Donnell. This is a fact. The average stake length and the number of stakers both go up daily. So yeah. And trust is also knows that people in Venezuela will fall on the Hex for sure. I mean, this is the thing people have to understand. Hexes get kept for a reason, guys. And this is why I want to go into this macro talk. This is just number one. I've been trying to kind of say all these things in my streams, but I'm realizing that everything that I'm saying is too complex to really just lay it out the way I'm laying it out. So what I'm going to do is I'm going to give it in a way that ties everything together to give you the whole picture, like what it is that I'm seeing bit by bit, because you guys need to understand this, because it's really going to be the best way that you can make the best decision with your staking habits. It's not so much only have 5 stakes, 4x5 stakes, but it's to make sure you have the right mix of stakes that you want based on what's going to happen, because you have to understand what's going to happen. What I'm saying is not fantasy, it's mathematics. When you print a currency 30% in 1 year, there's going to be a reverberation, period. Understand that there's a cost to every action that centralized parties take. Just because it doesn't happen immediately means nothing. This is why I have this post big payday chart for Hex, right? Because I want people to understand the big picture. Just looking at what the rest of the market is doing is irrelevant, because Hex is not the rest of the market. Hex stands by itself. And it's only a matter of time before Hex supersedes the first halving in Bitcoin, and the second, and the third, forever. Because people don't understand Hex. And I'm going to help you guys understand it like I do, because that's my mission. My mission is for you guys to understand that when you cash out of a T-share, you're cashing out of a business. That's what I want you guys to understand. Period. So this is the gist of today's talk. Understand the cost of money. Understand that the cost to borrow is the key to understanding everything. And right now, rates are going up. So when rates go up, things go down in price. But that's just how the legacy market works, right? And the reality is that when you're learning this stuff, you have to have both sides of the coin available to you mentally, because the legacy markets are manipulated. They don't work the way they're supposed to work. They work how they want it to work, because that's how it benefits them. So this is very important to understand. There's a reason you get these boom bust cycles in legacy finance. And that boom bust cycle is a function of the central banks and how they work and how they push the markets around to their benefit to then smash them to their benefit. It's what's been happening ever since forever. And we're gonna get into all of that, but this is really step one. And to be honest, I'm really just scratching the surface. Again, like, I'm really gonna try to give you guys the highest level view I can. Because to go into this will require really to make a course and all this shit. Like, it would be so in depth. I don't know. Maybe I'll do one. Maybe I won't. I don't know. Because again, I'm not really here to sell nothing. But if you guys are willing to pay for that shit, that's fine. Because again, it's valuable information, but I can only go so deep during the stream, especially for you guys to sit here and understand it off a first look. Very hard to pull off. Like, it took me a long time to really grasp all of the nuances of what I'm saying. But if you understand how water moves, you understand how capital flows. That's really the best way to look at it. The highest rate is always going to attract best capital. And that's the way I want to end this first macro talk. And the cost of money rules all. If your cost to acquire capital is high, your returns on it might not be great. But if the return stream is high, with your cost of capital being low, your return streams are going to be phenomenal. And I'll leave it right there, guys. The next stream will be just as good, if not better. And yeah, this is going to be a new direction in which we're taking things. I think this will help you guys understand my vantage point a little bit better. And it'll make it more palatable for everybody as well, instead of me doing the long run, long form 40-hour streams. And I'll try to convert these into podcasts as well. And I will really try to clean the format up to make it much better, much cleaner, and much smoother. So you guys can really, just get my point of view, because it's easy for me to say Hex is that next big thing. But what I really want is for you guys to understand that it really is the next big thing. And that next big thing is here. It's already that thing. Because once everybody else finds out about it, man, you guys aren't going to fucking believe. You're not going to fucking believe it. You're not. And that's my mission. My mission is just to make you guys just a little bit smarter than me, because you guys know a whole lot more shit than me. I just know this. So, I learn from you guys, and you guys learn from me. And that's how I hope to keep it moving. To shout out to everybody out there that shows me love. Thank you very much. And this is where we're going to end it tonight. Thank you guys. Hit those like button. Check out the description. If you're new to Hex, check out my referral link at income.watch. You're literally doing that when you have the Staker app. It's a beautiful thing. I've never looked at it before like I have recently, now that I fully understand T-shares. Get you that Staker app if you haven't. Income.watch. It's the bomb, baby. It's the bomb. Shout out to Stephen Firebun. They are like, whoever doesn't love them, you got problems. So good night, guys. Thank you again for joining me. And we'll be in touch. Catch you guys on Twitter. I'll be dropping the chart set shortly. Have a good one, guys.